Hey guys, this is Andrew for TRENDLINES.com. So for those who are watching my video for the first time, I've been working as a professional trader for the past 6 years in Hong Kong. And right now I'm doing some YouTube videos where I show you guys how I use technical analysis and how I read the volumes, I read the flows, the option interest, every financial data that I can have to predict price action. So in today's video, I want to show you what I see on Gamestop. Let's get into it. So this is my different scenarios. Let's focus on what is happening here, guys. So basically, if you remember, if you watch my previous videos, I was telling you that for now, the price action is, so let's actually start from here. So this is the 29th of March. So this is basically the past month on GameStop. And you can see that we are basically going lower. So I think we are still in the correction that is here, guys, that is doing something like this, 1, 2 somewhere, I don't know where is the second wave going, and 3, 4, 5, and actually 3, 4, 5. And I think we're going to go to 800 if the bullish case is actually the one that is happening. What I'm actually wondering is where is the second wave going? And to answer that, I use ELLIOTT wave principle and I use trend lines and try to see if this second wave gives me any signal of reversal. For now, guys, I don't have it. The basic one is, trend lines. So I connect, the recent highs that I have in my last wave, which is this one. So here, A, B, C. We're doing a C wave here. Let me label it if you guys, need to see it. And I don't know if this C wave is complete or not. I mean, if it's an ABC here, it's actually, it needs to go lower. It needs to go at least to the bottom of wave A. So what is actually another scenario that is happening, I think, right now, but to be the truth, I need to have some volumes picking up. We could be just in a 1, 2, 3, 4, 5 like this. This is actually possible as well. But once again, here, I don't know if the second wave is going here or here, I don't have that much visibility in the range between here and this trend line. Because if we go below 130, I know that basically this cannot be a 1-2. I know that, something like this is not possible. Because if it's a 1-2, it needs to actually hold above the beginning of wave 1. And for now, we are supported by the 200 period moving average, which is good news. And the question is, are we going to break this trend line on the upside and actually make a third wave, which is definitely a very likely scenario? Or are we going to just simply correct deeper and make a new low below here? If we do that, for example, this moving average here, it would help us a lot. I was telling you guys that here, in this area, you need to check the 20 period moving average because it was acting like as support very well in this whole, kind of beginning of reversal we had on the 15th of April. And I told you that if we break out this, we're going to see some strong downside movements. And here, what is a breakout? 2 consecutive candles below the support level you are checking. So 1 here on the 4 hours time frame. Once again, guys, 4 hours time frame. If you don't know where to go to the 4 hours time frame. So first candle closing below, second candle closing below. So here, guys, that your breakout occurred. So of course it can be a fake breakout. You can hope for that. But the reality is that what happened after the second candle is 2 more candles and then a strong move down. So you could have avoided this, 10% move down. And then, guys, as usual, where is the next support? Either you find some trend lines. So here you could find one actually. Let's see if this would have worked. I'm doing it with you guys right now. You connect this and this. Okay, you see it's going a bit lower. So this trend line wouldn't have helped you, for example, but this is the kind of stuff you can do. And if you don't find any trend line level, use the moving averages, guys. They are very efficient and they're giving you very precious signals. And here, if, for example, you want to stop your position here and buy back here, you can. Or just if you want to buy the dip, you don't want to sell any shares, which I can understand, then you simply wait for some signals to reload. So either you buy here, or the best thing for you guys to do is to wait for the breakout on the upside of this trend line. You know, guys, when I give you some information like this, keep it in mind. Look here, it would have helped you, and many times it would have helped you. This is what I would do if I was trading GameStop at work, for example. I would keep long biased, so some shares, and I would basically buy any. I don't like to buy when the price is going down. I like to buy when the price is already shifting up, but at the very beginning. I use very early signals and I'm buying reversals. And here, what I would do, guys, in this situation, I would wait for this trend line to be broken, and I don't buy the breakout, I buy the retest. You see, this is the kind of trading I like to do. So each trader is different, you know, but so it's something like this, because once we break this on the upside, guys, the probability we go higher is much higher than, you know, if we go here. Of course, we might see some rebound. We might see something like this. All right. If the price shifts lower here, we're going to have the rebound. But if you buy it, you can buy it, but then maybe put a stop loss just here, guys, just below, because it's not impossible. We just break it a little bit and go lower as well, you know. So this is, you know, something you need to keep in mind, is that if you buy, are you going to keep your shares, or are you going to stop your position if you go below? I know you guys are going to keep your shares, so better buying it when it's going to go higher, right? You don't want to buy it and see the price action going lower. I know that this might have happened to you guys if you buy the dip when the dip just arrives. That's not what you should do. If you want to buy the dip, you know, it's very rare the price action goes down and doesn't consolidate. Usually when you see here, for example, you have this consolidation each time the price action is going lower. So even here, you had 1, 2, 3, 3 candles, you had 12 hours to buy it. So if you buy here, for example, guys, you know, you're getting hammered. All right. So don't buy when it's going down. Wait for the consolidation, wait for the bullish signals to come, and then you enter your trade. And you can do this on every type of time frame. And here, what is happening is that GameStop is going lower, guys. All right. So we don't know where it's going to bottom. So you always can try to find where it's going to bottom. But the truth is that nobody knows. What I know is when a reversal is likely to happen. And this is the right time to enter your trades. Wait for the reversal. So here I'm giving you one. If we break this line, and this is going to be true until, you know, early May, this is going to be your bullish signals. And here, when I see the 200 period moving average coming here, it looks like it might want to break it. And once again, it's in line with my scenario that we're doing a 1, 2, 3, 4, 5. So this is a very likely scenario. It's actually for now my preferred scenario, and I would change my mind if we trade below 130. Then I would see an XYZ probably going to 110, maybe slightly below, but not long. But for now, this is the preferred scenario. I would just like to see more volumes, guys. You know, this is what is missing. It's true for AMC as well. There is, you know, the market is actually out of steam, but I don't have any bearish divergence on GameStop or AMC, and I have bullish divergences on AMC. I don't have any bullish divergences on GameStop. I showed you guys how to, you know, see it. You connect, for example, this low and this low, and you see if the MACD is going lower. But here the MACD on this chart is actually going slightly higher. So it's not a bullish divergence, but it's not bearish as well. It's just new information. One last thing I want to show you guys is the open interest. So I'm an option trader, guys, and I like to use the data that I have on the option market. And on GameStop, like I showed you guys already, it's insane what we see, you know. I compute all the open interest for every strike. So this is the strike, 100, 200, 300. And I can see, guys, the huge number of shares that I have on the 800 strike. If I, you know, check just the number of shares, it's here. We have 11, almost 12 million equivalent short shares bared by professionals in the market against retail. So it's like 21% of the total float share. Once again, those options, they don't have a delta that is equal to 1. So the exposure is lower. So I compute the exposure myself using some formulas that I have here. And I come up with the real short, synthetic short interest that is in the market right now. For now, we're having 400 million US dollar, which is 5%. And it has this kind of shape, all right? So it's like very huge on the 800 strike. This is very bullish, guys. This is some very bullish momentum. When I compare to AMC, for example, AMC has a total of a maximum of 12. And you can see that, for example, for now, we're having 5% on AMC and the maximum would be 12. So this is what we call the gamma. If AMC goes to 100, for example, it becomes 12 and it's going to be distributed like this. Okay, let's do the same stuff for Gamestop. If Gamestop, so for now we have 5%, so it's similar. So 5% of synthetic short interest on Gamestop. But if Gamestop goes to, I don't know, 2000, so I'm taking like obviously some very crazy prices because I want to make all this delta equal to 1. Then we're going to have the 21% that you find here because all the options are deep in the money. So the exposure is equal to 1 share, 1 call option strike, whatever you want. If it's below 2000 by far, which is deep in the money, then the exposure is 100%. And you can see, guys, that if this happens, the synthetic short would be mostly given by the 800 strike, which is insane because the 800 strike is very, very far away from the price we're having right now. And even the 690, guys, is very huge. So this is something that is completely different from what we usually have. All right. So let me go back to 160. This is even 150. So even 5% of synthetic short interest is huge, guys. All right. It's huge. Let me show you just Apple, how it looks. Apple, guys, looks like this. So the synthetic short is 0.6% only. I do the same thing. I take all the options until June. And you can see that it's concentrated around the money. And there is nothing on the very upside and nothing on the very downside. So this is very interesting to notice. And this is, of course, a very, very bullish sign, guys. Okay, when you have this option market that animated, this is very bullish. And I also keep an eye on the volatility of those upside strikes. And it's still around 190%. If it's going to 150%, I told you guys, I would let you know this is bearish because this means that market makers don't need that much protection for those kind of strikes because they see that it's fine. So it's just one more information because of course they can be wrong. But for example, right now, market makers are scared of the 800 level. They are very scared of it. And that's why they sell it for a very high price using a volatility of 190%. For Apple, the big strikes are around 50%, so it's nothing to compare. And for AMC, no, this is not correct. They are around 130%. I've seen that. It's not changing much about everything I told you guys. It's making the synthetic short slightly lower because the volatility is lower, so those options are diffusing less. Whatever. So the conclusion of this is just that Gamestop has a crazy option profile, you know, very, very unusual, very explosive on the upside. That's going to create some crazy moves in the market. This is what we call the gamma squeeze, you know, is the synthetic short growing, you know, when the price is going higher, for example, only to 500, we go from 4 to 16%. Guys, we're talking about 4 billion US dollar that professionals need to buy, not to be left short. So this is very bullish as well. So yeah, to conclude, guys, I'm neutral on Gamestop. Of course, I'm bullish on the long run, especially when I check the option profile, but I'm neutral on the short term. I'm waiting to see if we break this. Right now, it's the 155 level. It's going to go down, guys. So every day it's lower. The breakout level is going to go lower every day. So buy it when, I mean, I don't give financial advice, you know that, but if I need to buy it, I wait for the breakout, you know, and I buy the retest, which is even lower than the breakout. If we break out at 150, the retest might be at 145, something like this. So keep this in mind, guys. And if you enjoyed this video, please don't forget to click on the sub, like, and bell button. So you're going to be the first to know when I upload anything new, and stay close to shore. See you guys.